What's going on, guys? Welcome back to the channel. In this video here, I'm going to just break down how to find undervalued companies. Now, this is a process I use before running these companies through my software, and I use this site called Finviz. If you haven't heard of Finviz, it's an amazing stock screener site. It's completely free. There is a paid version that has a lot of other tools, but for what we're doing, it's pretty simple and anyone can use it. So what I'm going to do is I'm going to jump into the website here, and I'm going to show you what my screener setup is for finding a lot of potential undervalued companies. So 11 key categories here. We don't use anything in the technical or descriptive categories. Now, descriptive, you could essentially focus in on an exchange, or rather a market cap that you want to, let's say, dial in on, whether that's small, mid, or large cap, or mega cap, whatever your fancy is. But nothing really applies to us here as long-term value investors. I mean, shares outstanding, it only gives you pretty much the drop-down menu for like how many shares outstanding, not if it's decreasing over time or whatnot. But it doesn't really help us in that sense. We're looking at fundamental categories, folks. So here are the top 11 things that I look at, and this will all be listed in the description box below, but feel free to take a screenshot of all this, so I'll tell you why I look at these things. So starting off with our first box here, and my god, I apologize for my beard, it's terrible, it needs to get lined up. I'm going with the PE ratio underneath 20. Sometimes, you know what, I actually like just to put it underneath 25, just give myself a little bit of slack. But we're looking for companies that have a PE underneath 25, because you don't want to overpay for business in terms of what its price to equity or earnings ratio is. So 25 is our magic number. Moving on to return on equity, I like to just keep it at anything over 0%, because listen, while you're screening for companies, just a general list, every company is going to have a different return on equity depending on what it is. Typically, a tech company has higher return on equity, and then like you might jump into, well, there's like semiconductors, food distribution, and different industries like energy and healthcare, which is a large variety. But anything that's positive, that's a good starting point for us. Debt to equity, we want to keep that underneath 0.5, underneath 50%, because we would like businesses that typically leverage their capital through equity and not taking on debt. So that is what we're going to keep it at. And then when we go over to our long-term debt to equity over here, same idea, same thing. Price to free cash flow, always underneath 20. We don't want to pay anything more for that. Anything under that is phenomenal. So that's a good, usually your PE ratio and your price to free cash flow ratio, you want to try to keep them roughly the same, or around the same number. So if you're going to do under 20, do the same thing with PE ratio, or vice, or under 25. But I usually just keep mine underneath 20. Return on investment, I like keeping that over 10%. If I can find companies that have it over 10%, that's phenomenal. Gross margin, anything positive is good, because like I said, unless you're specifically looking at different industries or specific industries like tech and healthcare and stuff like that, they're going to have a wide range of profit margins. Like tech industries usually have high profit margins, and so on and so forth. EPS growth, we want to see positive EPS growth, so we're going to just keep that positive. Anything over 0 is great. Current ratio, we're going to keep that at 1.5, because we want to know that they can cover their liabilities with the assets that they have on hand. And 1.5 is a great solid number, and I actually use this personally in my software, because while a 1-to-1 ratio is great, that just means that they have enough assets to equal their liabilities. That 0.5 gives us some wiggle room, and in case anything happens that they need to liquidate further, we have that margin of safety that can cover us. Now, you could change this number to 2, 3, whatever you like, and it just gives you that much more safety, if you will. But I like to just keep it at 1.5, because I find that's enough to weed out a lot of terrible businesses. Operating margin, same thing. We like to keep that positive, keep it at 0% or higher. Net profit margin, anything over 0% is great. And like I said, debt to equity ratio, we'll keep that at 0.5 and under. Now, you put all those 11 categories in, it's going to give you this lovely list of companies. Now, we can dial it down from, different market caps, sort them however you like. So we can do this. Let's say the largest market cap company is Intel. So Intel fills out all of these categories here, and I've covered this company a couple of times, and I'm a huge fan of this business. I actually own stock in this business, so just it goes to show that this is a very popular company. So if you want to watch those analysis videos, you can find them up here. They'll probably pop up. I'll put the latest one that I've done. Micron Technology is also on this list. So this is a company that I've covered in the past. Mohnish Pabrai, very famous value investor. If you haven't heard of him, well, you will now, because he owns so much of this business. And I put a video out on analyzing this company. It's actually my most watched video, so you can watch it up here. It's my analysis of this company, but just goes to show that based off these 11 categories here, it is an undervalued business. Here is the list. Corvo, another business that I believe Seth Klarman owns, and yeah, the list goes on and on, so you can just sort those out however you'd like. But this is a phenomenal site. If you've never used Finviz, this is a great site to try to just help build your list of potential companies to look at and invest in. And obviously you can sort this out through different sectors and industries and countries, but those are my 11 categories. I'll send you the preset. I'll write it down. I'll get it to you somehow. It'll be in the description box below. But I just wanted to make this quick video because I feel like a lot of new investors just don't know where to start and where to look at. So we want to always focus, guys, on a fundamental analysis. Charts are cool if you're trading, but a lot of people, what they do and what they mix up in, oh my God, can I speak today? Can I talk today? What a lot of people do that I find when they're starting off in investing, they use a technical analysis when they should be using a fundamental analysis, and vice versa. You want to stick to one or the other. If you're doing trading, day trading, swing trading, long-term trading, technical analysis is what you're looking for. What we're trying to do here on my channel is look at a value investing approach. We're building a value investing mindset. So we want to use a lot of fundamental analysis parameters here. So I'm going to just bring it over to the stock research tool, and because just to pull up Corvo at a curiosity. Corvo, load that up here, because that was one of the companies that was on the list. I haven't covered this company just yet, but check this out, folks. Scoring it a 7 out of 10. So it pretty much checks off on a lot of our categories that we have here. Low return on invested capital, low return on equity average, and not so much of a decent PE average for a 5-year average, but a trailing 12 months is down. It is low. And look at this. Huge net income growth, huge free cash flow growth, huge 5-year revenue growth. So here's the thing, folks. You have a proper process to, let's say, funnel these companies in. You can get the companies from Finviz, and what I like to do is then afterwards bring it into my stock research tool. And if you're looking to get this app, stay tuned, because it's going to be available to you, my subscribers and viewers. So you can put them in through the stock research tool here and get a deeper look into the business, and you can do a price analysis to determine what a fair price to be for this, or for this company would be. And you can have access to not only American markets, but we have access to Euronext markets, Toronto Stock Exchange for my Canadian friends. So this is going to be available to you hopefully within the next couple of weeks. I am pushing so hard to get this app out to you. But that's my process, guys. I like to list everything on Finviz. Go through Finviz, get a wide group of stocks, plug them into the stock calculator, see what prices make sense for the businesses, and then just sit, wait, and then if it makes sense, buy it. Obviously, it has to be in the circle of competence, so that just comes down to you, the investor, and what you know. But that is the process, folks. You want to find undervalued companies, go to Finviz, use the stock research tool, and away you go. That's all it takes. If you like the video, hit the like button, hit the subscribe button, and if you want to see a company evaluated with my software here, drop it down in the description box, drop it down in the comment box below. I'll put everything that I've mentioned here in the description box, and I'll catch you in the next video. Thank you so much for watching.